Okay, let's start. Ladies and gentlemen, good afternoon and a very warm welcome to all to the first earnings conference call of EKI Energy Services Limited, hosted by Helium Securities. I'm your host, Akun Goyal, and from the management, we have with us today none other than Chairman and Managing Director of the company, Mr. Manish Dapkara, and the Finance Controller, Mr. Mohit Agarwal. Before we proceed ahead, I would like to state that during this call, the management may make certain forward-looking statements, the actual results of which could materially differ due to risks and uncertainties. If you have any question for the management, please feel free to ask by using the question tab appearing below your screen. Now, I would like to request Mr. Manish Dapkara to take us through the presentation and give us an overview of the company along with Q1FY22 results, and then we'll open the forum for Q&A session. Thank you, and over to you, sir.
Thank you, Akun. Good evening, ladies and gentlemen. I hope you and your families are staying safe and healthy during these challenging times. I take the pleasure of welcoming you all to Q1 FY21-22 earnings conference call of EKI Energy Services Limited. I hope you all had the chance to look at the financial statement and earnings presentation uploaded on the exchanges and our website. As this is our first interaction with investors and analysts post listing, I would like to give you a brief overview about our organization through the earnings presentation. So, next slide. Yes. So if you see the revenue from operations during financial year ending 2020 was around 65.90 crores or 6590 lakhs Indian rupees. During FY 2021, it was 190.79 crores, and during Q1 of FY 22, ending 22 is around 193.34 crores. So almost, if you have observed, whatsoever we have achieved at the top line during last financial year, we were able to achieve the same benchmark during Q1 of this financial year. The EBITDA margin, the EBITDA numbers for FY20 was around 6.15 crores. For 21, it was around 25, not around, but these are the exact numbers. So 25.33 crores. And for FY ending this Q1, it was 47.79 crores. While the profit after tax during year ending 20 is 4.51 crores. For 21, it was 18.58 crores, and during this Q1, it is 35.74 crores. And the EBITDA margin, if you have observed, are improving on year-to-year basis and quarter-to-quarter basis. So during FY20 ending 20, it's 9.3%, then 13.3%, and during Q1 of this financial year, it is 24.7%. And the profit after tax, that is the PAT margins, are improving rapidly from 6.8%, then 9.7%, and then 18.5%. So these are the key financial numbers that we have achieved during this Q1 of financial year 2021-22. Next slide. So during Q1 FY22, we continued to build upon the strong growth momentum of the previous year and delivered another quarter of the stellar performance, as we have already observed from the last slide. The strong numbers are driven by increasing market awareness for net zero emissions, then implementation of the Paris Agreement, increased demand from major markets, especially American and European countries, and these are specifically coming from the voluntary markets, because since you know in the international compliance market, the regional compliance market do exist, for example, European Union Emission Trading Scheme or South Korean Emission Trading Scheme, while internationally, whatsoever the major market we do have for the developing nation credits like India or maybe China or Turkey and other nations. So the majorly is the voluntary space, voluntary market coming from America and Europe, and improved carbon pricing of the carbon credit. So since the number of the credit demand is increasing, and so the prices are increasing considering the limited supply from in the international carbon markets. During the quarter, we delivered robust growth across segments. Our major business segment is climate change and sustainability advisory and carbon offsetting services. They reported a revenue of 193 crore in Q1 of this financial year 21-22 as compared to 190 crore of the last financial year. The growth has been supported by significantly improved margin levels. The company has reported a EBITDA of 24.7% and a PAT of 18.5%. As part of our ongoing business expansion and entering into the new geographies across the world, especially the developing nations, during the quarter, EKI Energy Services Limited has entered into a non-binding agreement to acquire 51% of a company called as Sustain Plus Arise, which is based at Pune and having good expertise related to giving advisory and consulting services in the space of climate resilience services, especially sustainability reporting. Although we were doing sustainability reporting, but after acquisition of this company, we would be able to support our clients from end to end, starting from, for example, if someone is going to start from zero, and someone is at the mid stage of sustainability goal achievement or sustainable development goal achievement, then this step of our organization is going to help us a lot. Further, more as part of efforts, we reward our employees by fully aligning their interest with EKI Energy Services Limited and pertaining and retaining talent during the quarter. The board of directors has approved a scheme for the issuance of 6.5 lakh shares under ESOP policy. Going forward, in line with our business expansion strategy, we will continue to identify new projects across the world, especially developing nations, and which can reduce carbon emissions, can develop carbon credits under various international carbon credit standard programs, say Clean Development Mechanism or Verified Carbon Standard, Gold Standard, Global Carbon Council, International Renewable Certificates, and various other mechanisms. Enhance biodiversity and deliver measurable benefits to the environment and society, and ultimately achieving 17 sustainable development goals. With strong business fundamentals, innovative offerings, and increasing client base, we are very confident of maintaining growth momentum and creating value of all shareholders and stakeholders during rest 3 quarters of this financial year and near many financial years to come. So next slide. So these are the financial performance, if you have observed, for FY20, then 21, then Q1 of 22, year ending 22. So revenue of operations, you have already observed. So the blue color are the key parameters, figures, like total revenue, gross profit, EBITDA, EBIT, PAT, PBT. And these are all self-explanatory, mentioning the growth or the achievements that we are achieving in the international carbon market while maintaining our global position as the carbon market leader. Just for your information, these are all the services. The major service that we do have is related to climate change, sustainability advisory, and carbon offsetting services. So this contributes our major top line, and under these services, we help organizations to get their project registered under various carbon credit standards, and then not only registering, but we also help them to verify. Not only verify, but we also help them to monetize those carbon credits. So this is the major vertical that we do have. And apart from that, 2 services that we are into is related to business excellence advisory services. That means ISO advisory. So we help organizations to implement various international standards like ISO 14064 or ISO 50001, and also at the last we do electrical safety audits under which we do audit of outlets, retail outlets, especially retail outlets of oil and gas companies across India. So next. This is the story unfolding through potential and growth. So I had started this organization during year 2008 with the name of EKI International, and it was a proprietorship firm from Indore, Madhya Pradesh. Then 2009, then 11. So 2009. So we had started with during 2008 with a standard called as Clean Development Mechanism, carbon credit, international carbon credit standard. And then during 2009, we had added verified carbon standard program. Then 2011, on 3 May 11, we had got our company incorporated, and slowly we had came into establishing our own desk, because that was the problem. We were giving advisory services up to 2015-16 related to only giving the project registration or verification. But after that, we found like our clients need the credits to be sold in the international carbon market, and at that time Indian carbon market we were not having very good support, or we were very good the buyers readily available to buy the kit. So we have started our selling desk. So we found the various buyers across the globe, and then giving the presentation to them and helping our clients' projects and subsequently the credits to be sold in the international carbon market, so that ultimately they will do get their revenue that they had considered at the time of decision making in the form of carbon finance. And then we had started during 2019 entering into the Southeast Asian market, and these days we do have our team there at 15 plus nations. We have sold 40 million credits up to 2020, and now we have got listed on stock exchange on 7th April 2021, that is during this financial year. So next slide. This is the business process, standard business process for carbon credit, because this is quite new for maybe I think so for the equity market to understand about the environmental commodity process, how those kind of environmental commodities used to get issued from the projects which are helping to reduce greenhouse gas emissions. So just to let you know, one carbon credit is 1 ton CO2 emission reduction from the atmosphere. So any business activity we do across the world which helps to reduce greenhouse gases like CO2 or methane, carbon dioxide or methane. So this kind of projects, if we are able to prove additionality and other eligibility criteria as per the approved methodology of United Nations Framework Convention on Climate Change, then we would be able to get the project registered. So if you see at the left hand side is a dark blue color, the business that our clients are doing. So for example, SoftBank or maybe Adani. So they are the project investors. They are the clients of ours. They've identified the project. If you see the cursor, so the project identification, then project implementation, then project operation and generation of carbon credits. This is the standard business that our clients are doing. Either it may be projects related to energy efficiency, or maybe cook stove projects, or maybe forestry projects, or agriculture based projects, or marine mangrove projects. Any different various kinds of projects are there across the world as per the approved methodology of UNFCCC. So this is the business that they are doing. So at the green part, if you see at the center, we help our client to get the project registered, get approval from Indian government or the host designated national authorities wherever the projects are located. Then at the right hand side bottom, if you see the light blue colored section here, we help our clients to get the monitoring activity completed. So we'll do prepare a monitoring report, hire a third party inspection company, get it audited, then clear all the non-conformities that they have identified, and then submit the project for the issuance of carbon credit. So that means ultimately the desk review again happens at the secretariat of the carbon credit standard body. And if you see at the black part, then we are the buyer for our project owners. Then we do contract with them. We do usually comprehensive contract with them. So at the time of signing a selection of EKI, if you see at the top, there is a box. So whenever they select, then we do also most of the time fix the rates and finding the buyer. That means we are the buyer. We sign contract with them and then sell of carbon credit to monetize the carbon credit. So this is a standard international carbon credit project cycle is there, and which is being adopted by all international carbon credit standards, maybe CDM or VCS, gold standard, GCC, or other international carbon market mechanisms, or carbon GG mitigation programs or programs are there. So next slide. We do have 1,000 plus projects across the world, comprising of solar energy technology, wind, hydro, other energy efficient technologies, and various others. So we do have a very strong team which can work across the globe on various projects. It may be upstream oil and gas project, downstream oil and gas project, energy efficiency project, mining project, process improvement project, or renewable energy project, or nature-based solution project. So we do have very good expertise to give advisory services for carbon credit project cycle, for getting the project registration, verification, and then pushing those credits in the international carbon markets, ultimately to monetize the carbon revenue or carbon finance for our clients. So next. These are the presence we do have. We do have 2,000 plus clients, including very big clienteles, which are big IPPs or big institutional investors, maybe at the bank like with the World Bank or Indian Oil or Fortum, NTPC, SoftBank Energy, NHPC, Indian Airport Authority. And we do have our presence there at Canada, Mexico, Brazil, and Argentina. At the American part, at the African part, we do have our team there at Ghana, at South Africa, at Kenya. While in Asian part, we do have our team at India, Vietnam, and recently we have hired few of our guys there at Thailand and Indonesia. So Vietnam is already there, and a very strong supply for us is coming from Turkey also. So these are the locations where our team is there, who is constantly working over developing new projects and bringing or helping the project owners to bring climate finance or carbon finance to make their project more feasible to get adopted or being implemented. So we are the member at the ITA, International Emission Trading Association. We are global gold consulting partner with CDP. We have the membership there at CII. We are the member at UNFCCC Climate Neutral Now. So next, these are all the associations and empanelments that we do have. These are all the international clients, including Kengen from Kenya, Pacific Light from Singapore, from Siemens, then Germany, UNOPS, IMF, IMO, World Bank. So these are all the clients which are located in the developed nation part or international clients. Next. These are all the national clients like SoftBank, so major portfolio now with Adani, Acme, Mitra, Fortum, Hero, GMR, IDFC, Vector Greens portfolio. Then after GVK, Samcorp, Hindustan Zinc, Mahindra Sustain, Jackson, Renew Power, which had got recently listed over Nasdaq, Avada, Azure. So all major Indian IPPs, whosoever are there at the national level, they are our clients, and we are serving for their whole portfolio, around whole portfolio for them. So next. These are the national PSUs. So we are working with Bharat Petroleum, Barman Lorry, GAIL, IMD, ONGC, MOIL, Rajasthan State Mines and Minerals, and various other NTPC, NHPC, Ordnance Factories, Indore Smart City. So very good example that we have created in the Asian carbon market is related to getting the project registered of Indore Smart City. And this is the first smart city in Asia which had earned the carbon finance or the carbon selling the carbon credit in the international carbon markets under the standard called as Verified Carbon Standard. And it had been recognized at the national and international level, the initiative that had been taken by the Indore Smart City, and which is India's the cleanest city, and we are proud of having in the same city. So yeah, next slide. So this is the industry growth drivers for us, like net zero emissions by 2050. More than 70 nations had declared that they are going to become net zero by 2040, 50 or around 60 under the Paris Agreement. Then growing usage of the carbon offset to become carbon neutral is one of the another driver. India's international climate commitment and high volume of carbon credit. So these are the industry growth drivers, and benefits of buying carbon credits to the organization is already being known to you. So next slide. Next slide, please. Key strategies. Can you go to the next slide? So the key strategies of the company is the addition of the new client and projects across the globe. So the backward integration to the project owners, we are also planning to develop our own projects so that we would be able to secure constant supply of carbon offsets for years to come. Increasing our international presence in the carbon footprint management. So we will do it through our company called as Sustain Plus, increasing tender participation and focusing over brand building and marketing initiatives. These are the key strategies that we do have during this financial year to come. So that means the next quarters to come. So yeah, next slide. These are the well-known stuffs that already been covered during the last slides. So next. Yeah, that is the last slide of ours. And so, Akun, I'm done with the presentation. Kindly take it ahead.
Thank you very much, sir, for the presentation. Ladies and gentlemen, we'll now begin the question and answer session. If you have any question, please post it on the question tab appearing below your screen. Okay, so the first question comes from Mr. Rishi Kapoor. He wants to know from the management that where do you see company in next 5 years?
So company, like we do have very good position related to the team that we do have, projects, the number of projects that we do have, and we are very, that means I'm very sure, and the organization board or the key decision makers, management, key decision makers are very sure that we would be able to be at a very good position. So on year-to-year basis and quarter-to-quarter basis during next 25 years or during next 3 quarters, definitely we will be achieving very high numbers. And we are also looking for high number of the large number of acquisitions or forming joint ventures so as to secure the carbon offset supply in our supply chain, so that we will do hold strong position in the international carbon market as a carbon leader. Yes, next.
Okay, thank you very much, sir. The next question comes from Mr. Venkatesh. His question is that how carbon exchange going to set up in Singapore will impact or help EKI. Is there any plans to build a carbon exchange platform in India?
We do not have any plan to build a carbon exchange platform in India, and since for the voluntary, we do not have any compliance carbon market. Earlier, compliance carbon market was there, and the international exchange was also there, called as ICE, International Intercontinental Exchange, and but now the international offsets are not being consumed under any compliance market, so that index is not working very well. But for the voluntary carbon markets, during last 15 years, there was no any exchange available, and whatsoever the exchange that is being planned to be opened at Singapore. So I think that name is exchange, but that would be a marketplace. So what I believe is exchange, where the exchange meaning is where the buyer and sellers will come with their volume, that means carbon credits and their trade price. But whatsoever the marketplaces are there. So there are many marketplaces which are available in the international carbon market space, and I think although they have named it as an exchange, but it is going to be a marketplace, because for voluntary carbon markets there is a high variation related to the vintage, technology, country of origin, program type, the investment that a client has done, SDG parameter that the project is supporting. So it's quite tough to fix price, because each carbon credit is unique in nature in the voluntary carbon space, and it is highly difficult to put any sort of carbon exchange. So I do not think the exchange is going to open in near future, and so there is no any impact that we have that we do see over the EKI's present market position or the future growth.
All right, sir. Okay. So now the next question is from Mr. Devang Bateja. He has a couple of questions. I'll read out the first. So his question is whether the revenues of the company are annuity based or one time only. This is his first question. And second, he wants to know who are the key competitors of the company and what unique thing does EKI offers.
So I'm not able to understand the revenues annuity based on one time only.
He wants to understand the revenue model that.
So revenue model, like our projects used to get registered for 10 years to 21 years, or few projects are 30 years, or forest-based projects used to get for registration for 90 years. So every year we need to get into the verification of the project activity and helping our clients to monetize their carbon credit. So it's not a one-time activity that we do for our clients, since the project's life, depending on the project's life. For example, if it's say 10 years, then for the rate of commissioning, from the rate of commissioning for next 10 years, the project will do get every year verification, every year selling of the credits, and so it is not a one-time revenue that our clients would be earning, and so our revenue are also connected with the sale of carbon credit of our clients. So that means it's not one-time activity that we do. And the other question is the competitors and the unique thing that we do offer. The competitors, that means you can obviously check over the Google. So, but the good thing that we do have is, or the unique thing that our organization is having is we do provide end-to-end services, starting from document collection for getting the project registration, then getting the verification, then getting the revenue. So client need not to worry about anything. They need not to take any risk of the investment. They need not to that means worry about the different processes and procedures that do go across the validation verification activity. So this is the best thing that our organization is having related to the unique proposition that we do offer to our clients.
All right. So I'll read his third question also. So he wants to understand that whether the EBITDA margins are sustainable based upon the Q1 results the company has declared.
So what is it?
Whether the margins are sustainable, the current quarter margins, means to say.
Yeah, so it means like if you have observed on year-to-year basis, quarter-to-quarter basis, it's improving. So why is it happening? And I have already covered the same, because the number of buyers are increasing in the international carbon markets, and the prices are also increasing. And so whatever the contract that we have done with our clients, so clients are also earning higher revenues that they had anticipated at the time of decision making. And so our revenues are also linked with their earnings based on the model that I already discussed during last question. So this margins, I'm very sure, are going to remain sustainable and it will not vary. Yeah.
All right. So next question we'll take from Mr. Somil Shah. He wants to understand that do you keep an inventory of credits to benefit from the price rise, or is there some sort of operational leverage that a business model enjoys?
So for till last financial year, we were not keeping the inventory. For a few days, since we do supply the credits, get the revenue. So for a few days it used to be there over the books, but not crossing any month or quarter during last financial year. But during this financial year, while checking the rise in the international carbon market, so we have decided to keep small volume as an inventory of the credits for definite period of time, not for indefinite period, depending over the strategy that we see on day-to-day basis in the international international carbon market and how is it moving. So we are not in the favor of keeping high inventory over the books, and that is what we are doing.
All right. So next question is from Mr. Jay Mehta from KSA Shares and Securities. Sorry. Yeah. He wants to understand on the acquisition of Sustain Plus. How much percentage of revenue will it be contributing to the top line? And are these margins of 25% EBITDA and to 18.5% PAT sustainable going forward?
So the second question already being replied earlier, and the first question related to the acquisition of Sustain Plus. So still it is in process. The acquisition is in process, and we are anticipating that the good number of the very good top line would be able to make under Sustain Plus, not at the international level, but also at the international level, because whatever the clients we do have, either at the consulting and that means at the generation end of the carbon credit or buying at the carbon credit. So both they do require such kind of services on year-to-year basis, and to keep them satisfied with the initiatives that they have taken. That means that whatever the services they are looking for. So because of the same reason, we have acquired Sustain Plus to give good and quality sustainability services to our clients.
All right. So next question is from Mr. Vivek Kaul. He wants to understand that what are the entry barriers for the carbon credit market, and what is EKI Energy's competitive strengths?
So the entry barriers for the competitors are obviously the network. So during last 12 years, we have created deep network across the world to supply the carbon offsets which are developing from the developing nation. Then whatever the team strength that we do have to work under different various technologies, programs, projects, methodologies that we have created during last 12 years. So and the ability to sell the credits and bring revenue for the project owners because they are generating millions and millions of credits, and to find a suitable buyer for them, to find without facing any transactional risk to bring the revenue or the climate finance for our clients. So these are all the strong barriers that the competitors used to face to enter our market.
All right. We'll take the next question from Mr. Saket. He wants to know that whether company has any plans for business expansion in US or Europe geography.
So as you see, the carbon as of now, before 31st December 2020, under the Kyoto Protocol, all developed nations were the buyer of the carbon offsets. So obviously, all the buyers we do have there at US and Europe majorly, and maybe Australia, Canada. Then rest of the nations like Japan and Russia. So these are all the major markets where our buyers are there, and obviously we are working closely to work directly with our clients located at US and Europe. So the answer is yes, we are looking to expand globally at developed and developing economies both.
All right. So the next question is from many investors. It is about the stock split, that whether the company has any plans for a stock split and any plans to go on main move.
So stock split, yes, that may be considered depending over the advisory from our the board of directors. It may be considered. So we are looking how to do it. So let's see, in the near future we may take the decision.
All right. So next question is from Mr. Somil Shah. Can you shed some light on the competitive landscape in this industry, domestically and globally?
So competitive landscape in the industry, domestically and globally, I'm not able to understand what is.
He wants to know like who are your great. If you can shed some light on the competitors in India or globally.
So obviously the same had been discussed, I think, earlier also. Okay. What are our strengths, or what are the market barriers that our competition at the national or international level they do face? So I think already had been discussed. Otherwise, if it's not, then kindly do email us at our email ID. We will definitely would be able to respond if I'm not able to understand the question as of now.
Okay, so we'll take the next question. The person hasn't mentioned his name. He wants to know that what is the revenue and profit growth guidance for FY22 and FY23?
So already the same had been discussed. We have very big supply which is under process. During Q1, we have supplied quite quantified number of carbon offsets to the international carbon market. Then again, during Q2, 3 and 4, we do have very good supply, which is available to be supplied in the international carbon markets. And so it is quite assured that the top line on quarter-to-quarter basis is going to increase and will not remain constant or may reduce.
Okay. So next question is from Mr. Hitesh. He wants to know what are the key risks or threats for the company in near future and in long term.
So key threats or risk, that means it may or may not be generated from the Paris Agreement COP26 Conference of Parties meeting number 26, which is going to happen from during first 2 weeks of November 2021 during this calendar year. So the international new carbon market or new statutory market is going to being established under Article 6 of the Paris Agreement, and it may be possible that few sort of carbon credits may not be allowed and few sectors may be allowed. So these are some low risk that we do identify, although if you do Google, because we used to remain on the D2D basis connected with the global international carbon market. So the carbon offsets or carbon credits supply or their existence is very much important for the nations to meet their Paris Agreement targets. So almost 2/3 of the nations whomsoever had submitted their nationally determined contribution had mentioned that they want to remain in the international carbon credit mechanism. And so whatever the risks or threats which are related to the company that we may do see in the near future are almost negligible that we do anticipate. And in the long term, it's a similarly, whatever the governing bodies here. So, during next 2-3 quarters, I think, or our management to think, that means, the carbon market size is going to increase. Whatever the voluntary market is there, so once the compliance market will do come, at the international level, then the market size will maybe 50 or 100 times more than whatever is there as of now, because voluntary market is voluntary in nature, while the compliance market maybe shall be in the compliance in nature. That means all obligated entities, they need to comply at the developing and developed nations to meet their emission targets. And so the carbon offsets. So just for your knowledge, for any nation to reduce the emissions, so there are 2-3 options: either to put carbon tax, like Singapore had done, to install emission trading scheme, like European Union had done, or the mix of the same, like South Africa had done. So what South Africa had done, so they have given the target to each major emitters there to reduce their emissions. If they are not able to do it, then they need to pay carbon tax. But if they are able to procure carbon credits which are generated from the South Africa only, then they may get the waiver for paying the tax. So this kind of practices or the policies are going to happen across the globe. So as of now, it's voluntary in nature, but once the compliance market will to get generated, all the market size is going to get increased by multifold.
All right, sir. So we'll take the next question from Mr. Sajjad from Param Capital. He has a couple of questions, but I'll state what is not answered by him. So his first question is related to the industry size. So can you give us some figure, like what is the current industry size of the business?
So as of now, for the voluntary carbon market, it's quite tough to determine the industry size, because each nation, the companies which are located in developing or developed nations, they are buying this carbon offsets for their voluntary purposes, and they do not declare, or there is no any registry or at the national international level where the market size of international voluntary carbon market can be considered, but since we see the demand is increasing and the supply is whatever the size is there, it's not increasing. So the market rate or the carbon credit prices are increasing at the faster rate on month-to-month basis. So the industry size, I do believe, can consume. Like we used to get demand from our clients based on development for multi-million credits, and so we do think as of now, whatever the internal analysis that we have done, that around another example that I want to give you is the Corsia. So for Corsia, the market size I do know because the recently one article had been published, and there it had been mentioned that on year-to-year basis, 2 billion carbon credits which are Corsia eligible. So Corsia is a international compliance program for the civil aviation industry. And under that program, they need to buy carbon credits for whatever the emissions that they are going to increase from 1 January 2021. So considering that particular market only, 2 billion carbon credit requirement is there from the civil airlines only. Then voluntary market is there. Then maritime demand is there. Then compliance markets are upcoming, like Korea ATS is one of the market. Korean Emission Trading Scheme is one of the markets. So the market size that is there is very, very big, considering the supply whatever is there.
All right, sir. So I'll read out his next question. His question is, while Q1 numbers were very strong,
so Q1 number is very strong because the credit requirement, the carbon credit requirement in the international carbon market is going that is increasing on month-to-month basis, and so the rates are also increasing and our top line is also increasing. So that is a main reason of having the high volume transactions. And the increase in the carbon credit rate in the international carbon market is another supporting point, which is helping to achieve very good, healthy top line during Q1.
Okay. And so his third question is regarding the seasonality, whether the business of the company is seasonal in nature.
No, not at all. Not at all.
Okay, fine. So we have plenty of questions coming around, but due to a limited time, we'll restrain for last 1 or 2 questions only. So I'll take the question from Mr. Manan Patel. Can you comment on sustainability of margins going forward?
So sustainability of the margin, PAT, PBT, definitely I had answered the same in during earlier questions. So we do have very strong pipeline of the supplies that we do have from our own projects that we are executing. So we do have more than 1,000 projects across the world, and during any point of time, we are executing around 600 average number of projects. So very good pipeline of the carbon offsets are there, which will do come during next 3 quarters. And whatever that we have achieved, we will do. We do anticipate that we will do first meet the benchmark that we have created during Q1, and we'll do surpass the same on quarter-to-quarter basis. That we do anticipate looking at the present market situation.
All right. So next question is from Mr. Sudeep Anand. He wants to know that can you give some color on carbon credit pricing, how it has moved over the past 5 years, current, and how do you see it over the next 2 to 5 years?
So during last financial year, the rates in the carbon markets, the carbon credit which are arising or which are getting developed from the Asian market were into cents only. That means less than $1. While the credits from Latin America may be considered in $1 to $2, and from the credits which are coming from Africa may be considered in $5 range. But so this is the trend for last, you can say, 5 financial years. But during this first half, you can say, or during the first quarter, the prices are now moving starting from 50 cents up to $20. So various factors are there which defines the carbon credit price, because there is no any national or international regulatory authority or mechanisms from which you would be able to determine the benchmark. So like the country of origin, sustainable development goals that the project is supporting, vintage, technology, country, that means the credentials that the project owner is having. So various different factors are there which makes different. So as I already informed or told, each credit is unique in nature, and depending on the technology, country of origin, it used to vary from. So the correct answer is it's varying. As of now, it's varying in between 50 cents to $20. So the projects which are supporting high sustainable development goals, maybe like 5 sustainable development goals or 10 or maybe more. So the credit rates are higher as compared to the projects which are supporting less SDG parameters.
Yes, sir. So the next question is from Mr. Tushar Sharda. He wants to know what is the revenue from consulting and revenue from carbon trading.
So since we do provide comprehensive services, there is no any bifurcation that we do, like as I've already informed, that means starting from document collection, then getting the project registration, then verification, and then that means monetizing the credit. So this is the end-to-end services, comprehensive services that we do provide to our clients. So we do not bifurcate in between the different stages of the project that we are executing. We do not do any such kind of exercise as of now.
All right, sir. So this will be treated as the last question. The last question is from Mr. Venkatesh. In domestic markets 2050, India need to become carbon neutral. How that will help EKI? So he means to say that by 2050, India needs to become carbon neutral. How it will help the country? Yeah.
So India, since now the question is India wants to become carbon neutral. So that means whatever the emission that we are doing, we should not do it, or if you are doing it, then we should become net zero. That means we should develop more and more projects which will sequester the carbon dioxide or the greenhouse gases from the atmosphere. So whatsoever the market is here as of now is voluntary in nature. So India do not have any target as of now to reduce the emission, but starting from 1 January 2021, since we have signed Paris Agreement, we have to become carbon neutral or net zero by 2050. That is a statement that had been given by Indian government during last few months back. And definitely to achieve, as I've already quoted, to achieve this neutrality, Indian government would be having 2-3 options, either to put tax. So if you want to reduce your tax, or if you want to not come into the carbon tax, then you have to obviously reduce your emissions. And so if you want to reduce your emissions, then you need either carbon credits or the technology that you are going to offer. So definitely the carbon market is going to increase, not at the national level, but at the international level, globally. And whatsoever the nationally determined contribution statements that had been submitted by all the nations to United Nations Framework Convention on Climate Change to meet Paris Agreement target. So again, that is not very ambitious target. So whatever the targets that had been or NDCs that had been submitted as of now, they are not at all ambitious to achieve carbon neutrality by year 2050 across the globe. So more climate ambition, more climate actions are required, and so the carbon market is definitely going to grow on year-to-year basis.
All right, sir. So, ladies and gentlemen, this was the last question for the call. Now, I will request Manishji for closing comments.
So thank you very much all the participants for joining the call. I hope we have been able to satisfactorily respond to all your questions. It is a pleasure to interact with you and get your queries addressed. If you have any more questions, please contact us, connect us, maybe directly to us or through Churchgate Partners, our investors relation advisor. Thank you once again, and we look forward to connecting with you all in the next quarter. We hope you and your family and your team members and colleagues remain safe in the challenging period. So thank you very much for attending this call.
Thank you very much, sir. On behalf of HIM Securities, I thank EKI team for giving us a detailed insight on the results and the time they spent on this call. I would also like to thank all the participants for joining this call. It was an extremely fruitful discussion. Thank you very much. Have a good day.
Thank you.
Thank you. Have a nice time, everyone.
Thank you.